Hello, this is Brian Shannon from Alpha Trends Blogspot. It is Friday, the 23rd of March, 2007, and the market's closed. And it was a heck of a week for the markets. Take a look at that weekly time frame. You can see how the 30-week moving average is the one that seems to have acted as support in hindsight. Not that that was any reason to purchase down there, but it bounced from that level. And, we've had a very strong rally here this week. I don't think there's many people that expected that kind of rally. And if I had $1 for every time the market surprised me, I probably wouldn't even have to trade at all. And that's exactly why we always use stops. You have to be willing to change midstream according to what the market's telling you. And that's the signs of a good trader, someone who can quickly reassess the situations and make those adjustments to their portfolio. And, fortunately, we've been pretty mainly neutral in terms of the stocks. I had been saying guilty till proven innocent because that 50-day moving average was declining. Now it's heading back up. We've got these moving averages crisscrossing. So for now, I think like I said yesterday, I think was that it's back to neutral for the markets overall. And it's a heck of a recovery there. We saw today a very narrow range again in the market. The S&P finished up with 30-cent gain, up 0.2%. And again, we saw the volume really dry up in here. Looking at a 10-minute time frame, again, this is where we broke out from after that Federal Reserve meeting at 140, 135, and we've seen this range tighten up here. We've seen just the first signs of distribution here on the short-term time frame. That is the short-term moving average cross to the intermediate-term moving average. It doesn't really mean anything other than what we already knew, which is the market's turning sideways in here. It doesn't necessarily mean it's going to turn back lower, especially when we see the direction of this 5-day moving average is what we generally want to trade in. We want to trade in the direction of it, that is. So as long as it's rallying in here, we generally want to trade in the direction of that on the shorter term time frame, and always be aware of what the bigger picture is so that we can adjust our risk and position sizing, that sort of thing. But for now, it just looks like a nice low volume consolidation. We've got this prior little support in here looking like it's support once again. So it's good to see that it's back above that level. I think that people who sold down here are regretting. People that sold short are regretting it even worse because they lose money every tick higher, and this market doesn't want to seem to give up any ground. I bet it seems like probably next week we'll get a little bit of a pullback here. I think this rally right now and the continued strength is just frustrating the shorts, which is one of the most fun things that the buyers can do out there, is to continue to frustrate them, because the bearish certainly relish in it when we've got a market looking like this. So it's a great time to be a trader, bottom line. Investors in this market, it doesn't seem to make sense to me, but not when they're trading this violently back and forth. Looking at the Nasdaq 100, the Qs also holding above that 50-day moving average in here now. That 10's just crossed up through the 20, so we've got indecision there. So back to neutral, and we're again back in the middle of this range that we had just broken down from. So we broke down, shook the sellers out, sucked some more shorts in. It's possible we could see new highs in this market in the next couple of weeks or so, because we've got a low volume pull back in here. The Qs were down 0.32%, down 14 cents today. But the market's really grudgingly pulling back, which shows that there's still bidders in this market and that the sellers aren't in a hurry to get out. They've already done what they needed to do, I think, or what they were forced to do with this breakdown over here. Now they're slowly bidding for stock to get some more exposure back to this market, which seems to have dodged a major bullet. So we've got signs of distribution going on in here. It doesn't mean the next stage is going to be a decline, but because we've still got to respect the fact that the 5-day moving average is rising, and that's innocent till proven guilty on this time frame. Let's look at the mid-caps. The mid-caps were up 0.32%. They finished with a 50-cent gain. And this market has been the strongest market for the last, you could probably say, 5 years or so. And it continues to outperform. This one broke out, with that Federal Reserve meeting as well at about 152.60, and it just continues to grind higher. We haven't seen these moving averages crisscross. So the short sellers are probably going after this group thinking, well, they're up too much and they need to come down. Foolish to go after the relative strength. Don't try and fade the relative strength. Always be a buyer of relative strength. And not always, because there's never any always in the market, but rising 5-day moving average, If you're selling short, you're early. Maybe you can make a couple pennies on a little pullback. Don't look at the market and say it's up too much and, oh, that was a dumb rally or it was just a short squeeze rally, because it brought real buyers into the market is what I think. And that the path of least resistance is higher, so respect the trend and hang on to your money. Otherwise, you know, you're going to be in a bunch of trouble financially by fading it. SMH, nothing's changed here, so let's not even talk about it. We had 3 open positions. Evergreen Solar, ESLR, we'd gotten involved in at $10 a share. I think, what was it on this day right here? On this day right here, we got involved at $10 a share. Raised our stop to $10.35. Out today with a 35-cent gain in ESLR. JAKKS Pacific, JAKK, we got involved in at 23.90, I believe, yesterday after a pullback or something like that. And our stop had been at break even. That didn't get hit today. So I'd say at this point, raise your stop up to about $24.20. And finally, we're also in OMNI Energy, OMNI. Got involved in this one at $10 a share. And our stop had been break even. Let's ratchet that up a little bit to $10.05 in OMNI.